Is the housing market bust or boom? One of the big questions in January moving into February 2023 is the market still doomed and gloomy, or are we booming again? And so when we compare the numbers to November and we look at what happened all the way through the second, third, and fourth quarter of 2022 and where we are today, I have some enlightening news that will be able to position yourself for incredible investments, purchasing opportunities to allow you to understand and know where we are right now and where we've come. 2022, going into the first quarter, was still an absolutely incredible time to buy a home. But since the second quarter of 2022, we've seen inflationary interest rates that have continued going up and up and up. And in fact, we just saw another increase just less than 30 days ago. But in spite of that, mortgage lending on a 30-year note have actually went down from the November high of 7.08%. They are sitting right now at 6.18%, so almost a full percentage down. Now, some mortgage lenders and some lucky folks are even seeing prices with a 5 in front of them on mortgage rates of 30 years or more for single family homes. Now, one of the great things right now that's happening, and we talked about this as we moved into the fourth quarter of 2022, was the fact that interest rates can only bear so much before the market and economic circumstances will plateau it. And with all due respect, I didn't think that this was going to happen this quick. Now, if you would have asked me last summer, I didn't think that interest rates were going to continue to go up continuously as we moved into the fourth quarter of 2022. So the biggest thing right now is I want to give you guys a market update of what's trending, what's happening right now, and what we're seeing pulling into the first quarter of 2023. Now, everybody moving into the third and fourth quarter of 2022 was sitting back, scratching their heads in awe with how high interest rates were actually going. We had a 14-year high of interest rates, but ladies and gentlemen, we just had one of the largest moves that we've had in a decline of interest rates since 2009. To take interest mortgage rates on a 30-year fixed note, where they were sitting in November of 2022 at 7.18%, now going down to 6.08%, is more than a 1% spread on mortgage rates on a 30-year fixed mortgage, and some lucky buyers right now are even seeing rates in the 5s. So ladies and gentlemen, the market is now starting to acclimate to this 6% mortgage rate on 30-year fixed mortgages. What does that mean for you? And what does that mean for the market? Well, according to Redfin, the first month of the year, they were experiencing over 13% more interest in buyers ready to go out and facilitate purchases and start shopping for homes, and over 17% of people that were pinging them on an increase of interest of new home buying, where they were seeing in excess of 40% declines back in November. Now, if you look at the second, the third, and the fourth quarter of 2023, interest for new home buyers and actual walkthroughs of scheduling for new homes to be viewed went down between 23 and 27%. So when we compare where we are today to the fourth quarter of 2022, and at the fourth quarter of 2022, if you accumulate all the sales that took place in October, November, and December, and you take a collective quantity of those, and you take a look at what's happening in January, moving into the first week of February of 2023, you'll see that more homes are projected to close in the first 30 days of the new year as opposed to the entire third and fourth quarter of 2022. So understand that right now, home buyers are out there. They want to buy. In fact, there's bidding wars that have been documented in Seattle, Central Florida, and Richmond, Virginia, where, yes, ladies and gentlemen, buyers, in spite of these inflated interest rates, are going out and competing against houses right now on the market. In fact, so much so that in the Seattle markets, which is where our Kirtland project is, we're going out and we're seeing buyers on homes over $1.4 million. The largest documented over sales price listing that they've experienced thus far is $133,000 over list price, relinquishing contingencies and move-out clauses to make sure that the home buyer secures the purchase of that home. And we haven't seen this in almost a year, ladies and gentlemen. And so we're right back to where we were. Does that mean that we can bank on what's happening right now to move into 2023 and continue this process that we once lived just less than a year and a half ago and now moving right back to it? I wouldn't get too excited too quick, but I will tell you, with mortgage rates dropping on the 30-year fixed, this is a great time to buy. Those of you guys who are going out and you guys are buying a single family home for a primary residence, how should you purchase today? So listen, I've been talking about this for the last 9 months, and I told people, when there's blood in the water, there's opportunity. And what happens is that most people, when they're sitting back and interest rates go up, they get scared because they say my money out of pocket month over month is more expensive. But when interest rates go up, values drop. And when values drop, it's the perfect time to go out and purchase real estate. Now, if mainstream market across the entire United States starts seeing bidding wars again, ladies and gentlemen, you've lost the window. You've lost the opportunity. And one thing that was happening in 2020, 2021 was people were halting on buying, and they said, you know what, values and prices are way too high. New home buyers can't get into homes, and those people that were already sitting at a good place financially would sit back and they halted their buying powers because they didn't want to sit and overpay for a home that they felt was over leveraged. Now, we saw prices come down slightly for a marginal amount of time. We saw money get expensive, but people halted and said, well, I want to wait for the market to recover. So you're either waiting for the market to contract or you're waiting for the market to recover. And so what's happening right now is we're seeing signs that 2023 could be a partial recovery of what we saw on the second, third, and fourth quarters of 2022. And if that's so, and this compression of market circumstances was that short-lived, yes, ladies and gentlemen, you fix and flippers, you burst strategies, those of you guys trying to find your end product for your single family home to live in, you've lost your opportunity to get a valuation that was less than what it was at the height of the market. So right now, I don't know that that's going to happen all that quick. As we move into spring, as we move into summer, I'd like to see how this transition actually happens and actually plateaus over the course of the next 2 quarters. We're still expecting that mortgage interest rates are going to continue going up slightly. But right now, we're starting to see signs of them plateauing. Now, how does this reflect commercial purchasing, investments, and long-term holds for real estate investors? That's the key. And I wanted to give you guys 2 asset classes, 2, ladies and gentlemen, that you guys can bank on in spite of what we've been experiencing with single-family homes. Now, I don't dislike the single-family home purchases. And I'll tell you guys that I think that single-family home investments are a great place to start, but they're not a great place to stay. I don't think that any investor should stay in the single-family home market. In fact, when a single-family home investor has invested in that place for a number of years, and they tell me their business model, I sit back and I get a little bored and I yawn because I know that long term, it's not an asset class you should stay in. And the reason that it bores me is because we were in that asset class for so many years. I wish that we would have went bigger, quicker, and earlier, because it's the only regret that I have being a real estate investor and developer for over 25 plus years. And so I tell you guys, single family is a great place to start, but it's not a great place to stay. Unless you're doing build-to-rent communities and you're establishing ownership of build-to-rent communities, it's very similar to multifamily housing. It's also very similar to storage space. It's also very similar to doing office warehouse or industrial warehouse and being able to position yourself where you're in some of the most sought-after real estate in the world, not just the country, but in the world. And so, ladies and gentlemen, the 2 most sought-after asset classes right now is warehouse fulfillment centers is number 2. But number 1 is multifamily affordable housing. Now, in that multifamily affordable housing, there's also built-to-rent communities. We're not talking about low-income housing, ladies and gentlemen. We're talking about affordable housing, housing made for middle class, the people that are working at the post office, the grocery store, the movie theater, the clerks that you see at the city counter offices, all the people that are living and working median nominal jobs, they need rooftops to live under, and there's not enough of them nationwide. And so in spite of what's happening with interest rates, in spite of what's happening with inflation in the market, we're still seeing an opportunity to service the affordable housing community, and we will so for the next decade at least. Now, that's if we do everything perfect in regards to what's needed in the single family home space and multifamily rooftops. Because right now, ladies and gentlemen, we don't have enough contractors, we don't have enough bandwidth for labor, and we don't have enough development going on to fulfill that, even if we did everything perfect over the next 10 years. So banks, financial institutions, in spite of what's happening with interest rates, aren't looking at asset classes that are desirable the exact same way. In fact, I just got back from the National Multifamily Annual Conference, where we go and meet with the largest bankers, we go and meet with the largest brokers nationwide. All the big guys are there, all the banks are there, all of the buyers are there, the syndicators, the investors, they're all there. Thousands upon thousands upon thousands of people go and meet up to be able to negotiate and talk about where the future is going, where we are today, what asset classes are most sought after, and what we should expect as far as money. And I'll tell you that lenders are still there whining and dining today just as much as they were last year, the year prior, and they'll be there next year doing the exact same thing, because the affordable housing asset class in the multifamily sector is, yes, ladies and gentlemen, one of the most sought after markets to be able to capitalize and invest in out of any other market class. And in spite of what's happening, lenders are willing to flex a little bit to get into an asset class that they love and they would like to be in, because of the financial viability, not just for them, but for you. Ladies and gentlemen, for more content just like this, click and subscribe to our YouTube channel. If you like the content, want more updates, pound that thumbs up button. And ladies and gentlemen, I look forward to seeing you next time.